What's going on, everybody? I wanted to kind of address my last video that I made and make things a little bit clearer for some people because sometimes I think what people think is I'm not giving you the whole answer. And the reason why I'm not giving you the whole answer is because I'm giving you time to digest everything. If you understand what I stated in my last video, where I'm talking about you don't owe the debt and I'm showing you why you don't owe the debt. Okay, now there are recourse states and there are non-recourse states. But initially, a loan is either a non-recourse or a recourse loan. Okay, so a recourse loan means that the lender can pursue after any foreclosure action, any deficiency, etc. Okay, that's the state's definition of a recourse loan. Non-recourse loan means that once the loan is done, it's over. But the issue is when they assign a loan in a fashion that is without recourse, they block their ability to collect. Okay, so we'll go to without recourse so you have an understanding, and then I'll kind of clarify why you're having these issues understanding. A lot of it is just reading. Okay, what people are trying to do is because when you get into a situation, you're trying to get out of it quick, but not understand how you got in the situation. I'm telling you 100% of the time, if you sit back and look how you got into any situation in your life, you will learn how to fix every situation that's coming forward. Okay. And we're going to go through what recourse without recourse. And then I'm going to kind of give you some some game on where you need to go. And my scent today is Rose 31 from the Labo. All right. So say you have an installment agreement, and in the installment agreement, the lender is not performing their duty, which was to actually loan you money, etc. When you get a car loan or most mortgages, right? That's like I said, you sign it, you blank endorse it, and that's how they enforce the instrument against you. Okay. Most instruments will show you how to tender payment or to, complete your obligation. But we're just going to go over kind of an auto loan, and then I'll kind of bring everything home for you. Okay, without recourse. If you see a note that's endorsed, and this is usually most auto loans, they're endorsed without recourse because usually the dealership is not going to facilitate payments, even though they may have another dealership. If you go through and get a loan through a dealership, they may have another dealership that does facilitate payments. Okay. Sometimes there's dealerships that have the authority to make payments and most of the other ones don't. So your payments are going through like a payment agent, and then they're directing it back to another dealership. It's crazy when you really start auditing this stuff and see how far the rabbit hole goes. It's very interesting. Okay. Without recourse, a phrase meaning that one party has no legal claim against another party. Okay. All right. When you go into the car dealership and you get a car loan, right, the dealer assigns the note without recourse to the bank. Okay. Now, when that happens, the bank becomes a holder of the instrument, right? Now, you never assign your interest to the bank. So now you're still liable on the instrument. So the bank is collecting from you because you never assigned your interest. You see what I'm saying? So they assign their interest without recourse, which means they don't have any liability. So any claim that you can bring will be to the bank, but you never assign your interest to the bank and delegated them to set off or settle the obligation or say that you have a claim to the instrument. Okay. It is often used in two contexts. In litigation, someone without recourse against another party cannot sue that party, or at least cannot obtain adequate relief, even if a lawsuit moves forward. Someone completely without recourse cannot sue anyone for an alleged injury or else cannot obtain any relief, even if lawsuits are filed. Okay? So once the dealership transfers their interest, they have no liability. So you can't bring a claim against the dealership. That means that they transfer their liability, their interest to the bank. So the only person that you could bring a claim against is the bank. Okay, do we now have that? So when the people are asking, what do I do? How do I do this? It's really simple. It's just like you have Google. I mean, everybody has the same tools that I have. It's just that most people don't spend the same amount of time because most people are not willing to study for 2, 3 hours a day. I still know this and I still study for 2, 3 hours a day. Okay. In financial transactions, the words without recourse disclaim any liability to the subsequent holder of a financial instrument. Well, if it's good enough for the goose, it's good enough for the gander. So this means that you can transfer your instrument or you could transfer your liability in the instrument without recourse to a bank or financial institution also, or anybody else, to the treasury, etc. To another person that knows how to enforce the instrument better than you do. You see what I'm saying? Like people just want somebody to say, oh, and then send this form and then do this, and here's a template. You're never gonna learn that way, people. Because the moment that you have a hiccup, you're gonna have to keep coming back to that person. The key is to understand why things happen. So then once you put everything together, you're like, oh, this makes sense. This is why I have a right to send a notice to the bank. I have a right to claim the instrument and the proceed therein. So I can either transfer my rights to the bank or I can either claim them. Okay. Thus, endorsing a check and adding without recourse to the signature means that the endorser takes no responsibility if the check bounces for insufficient funds. So a lot of lenders won't, they won't accept these checks. They'll send it back to you because they know the power of endorsing something without recourse. Okay. If the bank accepts such a check and deposits the stated amount in the endorser's account, the bank will have no right to withdraw that amount from the endorser's account. I just told you how to claim your instrument. Listen to what I just said to you. All right. So you have to understand what a check is. Okay. And I'll go over a legal definition of check. I may do it on this call, may not. It doesn't matter. Okay. Look, thus endorsing a check and adding without recourse to the signature means that the endorser takes no responsibility if the check bounces for insufficient funds. Okay? If the bank accepts such a check and deposits the stated amount, meaning if I write a check and I put without recourse and it bounces and the bank deposits in my account, they can't take it back. Okay? So the bank will have no right to withdraw the amount from the endorser's account. All right. Now we understand without recourse. So, there's certain things that people need to understand about restrictive endorsements, unrestricted endorsements, blank endorsements, allonges, assignments. See, this is not just some easy stuff that I could just do one video and just give you the cure for everything because there's so many ways to do something. Okay. I'm just going to use this. I'm going to use this citation out of Washington, D.C., um, or District of Columbia, which I love D.C. anyway. Um, so a person taking an instrument other than a person having rights of a holder in due course is subject to a claim of a property or possessory right in an instrument or its proceeds, including a claim to what? Rescind a negotiation and to recover the instrument or its proceeds. A person having rights of a holder in due course takes free of the claim to the instrument. Now, let's go what rescinding negotiation is. Now, I'm trying to explain this. I'm leaving footprints to people. So once you start studying, you'll be like, okay. So look. This is why I was telling people that you can rescind auto loans, you can rescind all this, because there is no auto loan. What it is an investment security. Okay. It's not an auto loan. They didn't give you the car because you signed the promissory note. They released the car to you because you signed the promissory note. The bank doesn't hold title. That's why when you hear people say MSO is the title, no, it is not. It's not. The MSO does not give you title. It just proves that they don't have title. You see what I'm saying? So people telling you an MSO, the MSO doesn't reference you. Boy, it's so much misinformation on this internet. It's just so crazy. So look. All right. So subsection UCC 3 202, negotiation subject to rescission. Okay. A negotiation is effective even if obtained from an infant, a corporation exceeding its powers. See, a corporation exceeding its powers, or a person without capacity by fraud, duress, or mistake, in breach of duty, or a part of an illegal transaction. So, a negotiation, even if it's illegal, the negotiation. So, you want to look up what a negotiation is? Okay. So, okay, there it's right here. So, I don't even have to do it. Okay. So, a negotiation means a transfer of possession, whether voluntary or involuntary, of an instrument by a person other than the issuer. Okay. So remember what I told you last time. I said you're the issuer of the instrument. Okay. Means first delivery of the instrument to by the maker or drawer, whether to a holder or non-holder, for the purpose of giving rights in the instrument to any person. So when you sign an instrument, right, it almost acts as like a power of attorney. Okay. So it almost acts like a POA. And that's why you when you call the bank, they don't really say nothing because you don't really have an agreement. Like when they transfer that instrument, they transfer all their rights into it. What they did is they transferred their liability. So when you talk to the bank don't have, they don't care. So you notice like you start sending them notices and the bank don't care. So like they'll accelerate your loan, they'll do anything. And the reason why is because you don't have an agreement with them. So you think you have an agreement with them, but you have an agreement that they hold. Okay. So you don't like you have it for them to open up an account on your behalf. There has to be either a deposit or instrument for deposit. It's just like when you go to a bank. A bank can't open an account without some sort of signature, something to give them the rights to the account, and then they give you the your deposit agreement, which I guarantee you none of you read. None of you read. So, like, if you don't read your deposit account or your deposit agreement, you are really in a bad state. So, except for a negotiation by a remitter. So, let's see what a remitter is for you guys, so you can have a understanding. A remitter means a person who purchases an instrument from its issuer if the instrument is payable to an identified party other than the purchaser. So when you go through the UCC, click on all of these terms, read them, and keep reading them till you understand them, and then you beat it into your head. Because the only way to understand this is be able to speak to it on your feet. Okay. If an instrument is payable to an identified person, negotiation requires transfer of possession of the instrument and its endorsement by the holder. If an instrument is payable to bearer, it may be negotiated by transfer or of possession alone. Okay. So in the last video, that's why I was telling you when you're signing stuff, right? And your signature is unrestricted, what you're saying is I'm going to be the accommodation party. So I'll show you what an accommodation party is. And then you'll understand what's going on. It's just a game of hot potato, really. That's all it is. So I don't know why I don't even live in Washington D.C., but their uniform code comes up quicker than my state's, which is crazy. Okay, so if you understand what an accommodation party is, so an accommodation party is a person who signs an instrument to benefit the accommodated party, either by signing at the time value was is obtained by the accommodated party or later, and who is not a direct beneficiary of the value obtained. Okay, so when you sign a account or you sign a promissory note in a certain matter, what happens is you blank endorse it. And when you blank endorse it, anybody can trade this, anybody can assert their rights into your instrument because you didn't assert your rights into your instrument, right? So an accommodation party will usually be a co-maker anonymous endorsement. So what do? You break it down even more. What is an anonymous endorser, right? The reason why you guys have to keep doing this and keep studying, because I've never seen a person master anything that never put any effort into it. So for somebody to sit there and say that somebody should give you the steps, give you the answer, that's foolish. When I was doing this, I never had a Facebook group. I never had somebody teaching me and coaching me this. I had to figure this out on my own. So what makes me any more special than you? Nothing. Look, a person other than a maker, payee, or holder of a negotiable bill, okay? You can make your bills negotiable, okay? So you have to study negotiable instruments, see how to make a negotiable instrument. That means a bill can become a bill of exchange. A bill can become a check. A bill can become a draft. It could be negotiated through a bank or through transfer. It could be assigned. Okay, you can assign your child support. You can assign your mortgage. You can assign your loans. It's not hard to understand how to do an assignment or transfer. You can just read the damn UCC. It'll show you how to do it. The UCC damn will write most of your letters. You can take it through AI software. You can go on the internet and Google how to do an assignment and transfer. Just people just need to stop being lazy, man. I do videos and somebody come in the comment section and say something. I'm like, dude, you could have went on Google and found that information out. It was like 5 seconds. A person other than a maker, payee, or a holder of negotiable bill or note who endorses it for some purpose other than to transfer it. So you don't always have to transfer your obligation. You can receive your obligation too, but transferring it may be easier for people who may not understand how to make a claim to an instrument. You see what I'm saying? So look, if you get into an installment agreement and the lender fails to perform, you can send them a notice of your rights and you can assert your rights. So you have the right to include a claim to rescind, including a claim to rescind negotiations, and to recover the instrument or its proceeds. A person having rights of holder due course takes it free of the claim to the instrument. So look, this section expands to the reference to claims too. The instrument mentioned in the former section 3-305 and 3-306 claims covered by this section include not only claims to ownership, so that means you have a right to claim ownership to an account in its chattel, but also any other claim of property or possessory right. Okay? Listen to what that just said. It says that you can raise once you know your rights, everything I'm saying to you will make 50 times 100% more more sense. You know, everybody's on the internet. How do I do my remittance coupons? How do I do my remittance coupons? How do I make payment? You may not have to make payment, and technically, you really don't. But what I'm saying is, your your concept is wrong not only because you're listening to everybody on the internet, you're not centering yourself. You're not doing research on your own. When it's all said and done, even if you take a guru's advice, you took the initiative and did it. So if it falls on your face, it's always your fault. Why? Because you never did enough research to figure this out on your own. So you acted out of desperation. And when people act out of desperation, what do they usually do? Make bad decisions. So I would not do anything out of desperation. I would always study until until I really understood it. Okay. When you understand this, you'll be like, oh my goodness, this was so easy. I didn't know this was what I had to do. You have to learn how to assert your claims, and then you have to know how to back it up. So when you're asserting a claim, let's get into so you guys understand how to assert a claim. So if you're asserting a claim, right, say on a mortgage, okay, you have to understand there's ways to do it. So I would send it to the lender, and then I would accelerate it after a certain amount of time and escalate it either to the FTC, your state Consumer Protection Act. You can report them to HUD. So there's many things that you guys need to know. Like it really, this game is really cerebral. So if you can't think, if you don't know how to think on your feet, yeah, you're gonna have a hard time in this movement. But let's see. So we're just gonna go over basic writing. You don't even have to just go under legal writing all the time. Sometimes, so look, quick writing for effective claims, right? And I'm gonna show you how to state a claim. Okay. So look, assertive, specific, provable. Okay. So this is just basically telling you how to write. Okay. What are you saying here? See, this is why I always tell you you have to understand why you're saying something, why more than how. Because if you understand why you're saying something, then the how will come to you. You see what I'm saying? Even if it takes a few weeks or whatever, the how will come to you. The why is the most important. Why am I sending a letter to claim my interest in an account? Why am I sending a letter to claim my interest on a mortgage? Why am I sending a letter to claim my interest in a credit card agreement? Okay. So look, you have this publication here, and it's basically telling you about stating a claim, what elements you need: strategical information, study analysis, specific experiments, investigational research, examples. So, to have an effective claim, you need an explanation, you need evidence, and you need an application of evidence to the claim. So, I would take this is why I was telling you guys when you do a debt validation, you have to do a debt validation with purpose. You can't just do a debt validation. So a lot of times people are do a debt validation. Don't do a debt validation. No, if you don't have your documents, you need to do a debt validation. If you have your documents, you don't. You need to assert a claim. Okay. So look, here's another effective way to understand how to assert a claim if the lender is not responding. So the lender does not always have to agree with you, and the lender does not always have to respond. So what happens with a lot of people that I see doing this is you do an administrative process, you got the lender by the balls, and you never pull the trigger. Since I've been doing this for about 2 years, that's the number one thing I see. When I talk to people, they do an administrative process. They never follow up on the administrative process. They never default the bank. They never go into court. They never do anything. They never do an arbitration. They never do anything. And then when they do it, now remember, this is one way you can tender payment, but I'm just showing this is one way to get things done. You don't always have to argue. Some people don't have it in them to argue, and some people do. So I had to learn by doing this. I learned different personality traits. Okay, but if you're going to learn how to state a claim, you kind of want the general concept of Rule 8. Okay, you almost want it to be like you're doing pleadings. So a short and plain statement. Okay, so first of all, just the way you're structuring this is going to be how you structure your letter. Okay, obviously you're not going to talk about the grounds of the court's jurisdiction, but a short and plain statement of the claim showing that you're entitled to relief, a demand for the relief sought, which may include relief in an alternative or different types of relief. Okay, so when you're dealing, it's almost like you want to prepare yourself for going to court. Now, even if you want to notarize the instrument or notarize the document, you can do that. A notary is not, I don't understand what people are talking about all of this. The notary is this, the notary is that. What a notary does is verify that you're alive. Because it's illegal for somebody to administer a live person's estate without their consent. Okay. So I gotta find that on the internet where the IRS says that, because there's actually an IRS publication that says that, and I can't find it. I hate that when you open up a whole bunch of tabs on your phone and you can't find stuff. So first, we have to understand the rest. So the claims of the instrument. Okay. So you can also read these sections too. So also included in claim based on section 3-202 for rescission of negotiation of the instrument by the claimant. Okay. Claims to an instrument under section 3-306 are different from claims in recoupment under uh, referred to in section 3-305A3. Now, a claim in a recoupment is basically a claim to the proceeds. So you can get the claims to the proceeds paid in the instrument. So if you put a down payment on a vehicle, down payment on a house, you can get all your money back. So most people, all right. So first we have to understand what recoupment is, and then we can go into what a claim in recoupment is. So recoupment generally means the recovery or collection of money that was previously unduly paid out. So more specifically, you can also do a recoupment on your promissory notes. You could do a recoupment on your remittances. You I Man, I could really get into some stuff. I'm really not. But you can really you can recoup everything you paid out. If you Once you start understanding how to do this, it can mean a defendant's affirmative defense to reduce a plaintiff's claim by an amount the defendant argues that the plaintiff owes the defendant arising from the same transaction. Also referred to as equitable recoupment, or in civil law jurisdictions, reconvention. Recoupment differs from set off in that is not an independent claim, but is an equitable remedy. So a lot of times when people talk about equity, they try to strip equity away from law, not understanding that law is infused with equity. Okay. You can't have both without the other. So you can't have a legally enforceable contract without it being equitable. Now, if somebody is enforcing a contract, they're using their legal right to enforce the contract as the holder. But do they have the authority to enforce the claim through a court of law? Actually, in most instances, no, because most agreements are not they do not have consideration or a mutual assent. It's one side of a party doing a standard agreement, which is not unique to the other side, and that's why they really lose their enforceability once the person really actually knows their rights. Well, I hope this has helped some people who have some issues or some needed some understanding that this is just one remedy. Claims to an instrument uh, and it's not hard to do. But some banks will try to trample over you and accelerate the loan or close down your account when you start doing this, and it's just a bully tactic. You have to understand that a business did not get into business by being soft. Okay, they didn't get it. They didn't get there from being soft. Most businesses are just designed for the business to stay intact. So if you send correspondence to a bank or financial institution and you do not enforce it, it's on you. And that's what I see most people do. That's why I tell people, like most people, when they're asking for like, how do I make payment? How do I do this? I said, most of y'all already have the remedy. It's just that you guys don't have the confidence to enforce what you did, or you don't know how to word it properly. So sometimes when you're sending out correspondence or you're responding to a bank or financial institution, I always say it's best to take the correspondence, sit down 2 or 3 times, and look up what the words mean in law. You see what I'm saying? So when you're responding to them, you're like, oh, okay, now I understand what you're saying. And also, it allows you to take some of your emotion out of your response, because a lot of people get very emotional and don't read documents, and then they just start spazzing out and start panicking. You know what I'm saying? So, well, I hope this helps people, and I'm out.